welcome to the show. Today, I'm going to be covering a topic which I started to touch on a few episodes back in the subject of how time can work for you. Now, the theory of this is very simple. And what I'm going to be covering today is called pound cost averaging or dollar cost averaging, or insert whatever currency you operate in for the first word. And the principle is very simple. It's pretty much the same as you do if you pay into a pension every month. You put a certain amount of your wages, or you put a set amount into a fund which will grow over the course of time. You hope it will grow over the course of time to be able to fund you in your old age. And so the principle, the theory is the similar or same as that. It's just that you are now in control. You get to decide where you put your cash. So, what I'm going to share with you today is not financial advice. It's just from my own experience, and it's basically to educate you on this idea. So, there are a few very simple steps that you need to take. So, the first step is to choose a particular investment vehicle into which you can and want to pay into by virtue of research and due diligence that you've done on that particular vehicle. I always advocate making sure that you know what you're getting into and that you've done your research on the historic performance. That's not to say it's going to continue to perform in the same way, but with this example, I'll show you how it doesn't necessarily matter. It matters that you choose something which is solid, stable, has a good performance history, but I'll show you how the magic of this works in just a little while. So listen to the end so that you hear the whole story. So it's somewhere that you can put your funds into, either directly through a platform. So there are plenty of investment platforms these days, or through a financial advisor, of course. You can always work with a financial advisor to help you to choose the right vehicle for you. Entirely up to you. So the next step is to pay the same amount into this vehicle or on the same day of either each week or each month, or however often you're going to put money into this particular vehicle. But make sure it's the same day or date each month or week so that you don't even have to think about it. This is absolutely key. Ideally, you want to see if you can make it an automated payment. There are ways that you can do that. There are platforms that will allow you to set up a weekly or monthly payment into that particular vehicle, and you don't even have to think about it anymore. The main thing you have to make sure is that you've got enough funds to be able to put into that particular platform each week or each month, or however often you're going to do this. Step number 3 is to leave well alone. You can check the performance anytime you like. I suggest that you make it, not that often, because the principle is that you're going to be building this over the mid to long term. Ideally, you might, in the first instance, you might check it each week, perhaps, or obviously, if you're doing it, manually, you'll check it every time that you're putting it in manually. Otherwise, you can leave it well alone and you can check the performance every few months or even just every year, depending on how long term view you're looking at this. And step number 4 is that once you're comfortable with this idea and you've been practicing it and you've been seeing the performance from the first one that you've done, is that you can rinse and repeat with another type of investment which has performed historically well and to which you want to sort of dip into as well, and which you have confidence in, perhaps now that you've started the ball rolling. And this way you can actually build up a portfolio of these types of vehicles, which can be building up over the course of time. Of course, it depends on how much you have available to put into these types of funds. But in my experience, this is by far, or certainly one of the most powerful ways that you can take advantage of a particular vehicle or a particular investment proposition, and you can even out the roller coaster ride that can happen with prices going up and down. We've all witnessed stock markets going up and down in crazy movements, cycles, patterns. The whole stock market is about psychology. It's about trading patterns. It's about recognizing when stocks and shares are moving up or when they're moving down. Same in the cryptocurrency market, the same in other types of markets as well. And we can't predict. We can predict to a degree, of course we can, but if you're not in the game, if you're not trading regularly, this is a way that you can take advantage of well-performing assets without having to put an awful lot of time and energy into it. Okay, you just choose one, you pound cost average, and what happens, and I'll demonstrate in just a second, is that pound cost averaging evens out the big swings, the big highs and lows that can come in the market. Okay, so you don't have to keep an eye on it every minute of every day or even every week. This concept also teaches you how to take control of your own finances. It does take advantage of those big moves, particularly upwards moves. And of course, you can make decisions at any time to liquidate that position and take your money back out. And so you don't have to wait for somebody else to give you permission to do that. And it's not locked away so that you can't ever take action. And this is a really powerful thing of this. You have control. It also is, in my opinion, again, just my opinion, perhaps better than putting a lump sum in at once to a particular form of investment, because what can happen is if you decide to put £1,000 or £5,000 or £100, whatever your budget, into a particular stock, share, cryptocurrency, whatever it is, type of unit, trust, whatever, and if that all of a sudden has a moment where it's trending downwards, and because you don't know really what you're doing, and it trends downwards, you could end up losing a significant amount of value in that asset if you've just gone, right, I'm putting that big sum in right then, right there, and that's all you've got to work with, and then it goes down. You could be sitting there for quite a while before you're able to do anything with that, because if you were having to sell it, you'd be losing money at that point. So by drip feeding, pound cost averaging, dollar cost averaging into a particular vehicle, it just evens things out over the course of time. So I'm going to demonstrate what happened. What we did for our Freedom Club members a while back now was we put together an example of if you had pound cost averaged into Bitcoin back in April 2022. And we did it over the course of a year. And we showed what would happen if you consistently put $50 a month into Bitcoin at exactly the same time each month. And we chose the first Sunday of each month, just for argument's sake. Okay, this is what we did. So this is what happened. Now I'm just going to grab my spreadsheet and I'm going to share with you exactly what the figures look like. So we started on the 3rd of April 2022 and we put in $50. And at the time, the Bitcoin price was $42,670. So that bought you 0.00117178 of a Bitcoin. Okay. Well, quite a small amount, but still, that's all good. Interestingly, the next month, we bought it on the 1st of May. And the price of Bitcoin had gone down to $33,887. Now, did we mind that price had gone down? No, we were absolutely raving about it because our $50 that month bought a little bit more Bitcoin. We bought 0.00147549 of a Bitcoin that month. So with our same $50, we were able to buy a little bit more. I'm going to fast forward a few months. The price progressively went down, by the way, quite significantly. The next month was $27,000 roughly. The next month, $20,000. The next month, $24,000, $21,000, $19,000. And the low point was in November, 6th of November, 2022. The price went down to $16,189 for a Bitcoin, which is what? A third of the price that we'd started at, pretty much, near enough, which is crazy. So if we'd put, $1,000 in at $42,000, by this point, we'd be pretty gutted because the price has gone down. We can't access that Bitcoin. We can't, well, we could, but we'd be losing quite a lot of money at that point. So that price allowed us to buy 0.0030885 of a Bitcoin, which is significantly different. It's pretty much 3 times as much Bitcoin that we could buy at that point compared to the price at $42,000. So you can see the principle here, hopefully, that it kind of evens it out over the course of time. So even though this particular year, and even at the end of the year, the price only ended up at, on the 5th of March, 2023, it ended up at $21,270, which is, pretty much half of what we'd started the year at. So let's have a look and see what that meant over the course of that year, because I find this absolutely fascinating, absolutely mind-blowing, in fact, how you can work with this and have a play with it, really. It's great fun. So $600 was invested over the course of the year, first Sunday of each month. After that year, we owned 0.02760,507 of a Bitcoin. I know I'm saying O's and zeros. Sorry, I'm confusing the issue. But anyway, you get the idea. So basically, almost zero point zero 0.03 of a Bitcoin. And at that time, exactly a year after we'd invested, so the beginning of April again, it would have been in 2023, that Bitcoin price then was $29,817. That gave us a total gain on the money that we put in of $223.10, which was a 37.2% gain. I'll repeat that. From the $600 we put in, we made 37.2% gain. Now, that is crazy, right? In a year, especially because the market was going wobble up and down like an absolute yo-yo. In fact, it did almost a great big crater in the middle. It kind of started at the top, went right down, and started to come back up again. So we were kind of at the bottom of a trough, really, a downward slope, a trough, and then a slight climb back up again. So you'd think that, if you'd put $600 in at the beginning of that year, you would have lost money. You'd lost half your money, basically, at the end of that year. But by pound cost averaging, we made 37.2% gain, $223. Now, if we just left it at that, did nothing else, by the beginning of April in 2024, last year, the Bitcoin price was $68,135. And therefore, the total gain of that $600 was $1,280.87, which is a 213% gain. I mean, mind-blowing in just another year without putting any more in. Imagine if you'd carried on pound cost averaging in over the course of 2023-24. Are you starting to get the picture here? Right. Now, let's have a look at it right now. I took the price literally just before the call. This is going out roughly middle of January, end of January 2025, this episode. And the price today is $95,711 Bitcoin. Okay. And the profit alone on that $600 investment is $2,042.11, meaning a gain, a percentage gain of 340%. I mean, I have no words. I'm not saying that every investment's going to do this. I'm not saying that everything that you choose is going to do this. However, I'm wanting to demonstrate the principle and the power of what pound cost averaging, dollar cost averaging can do for you. So all this in a little under 3 years. I mean, it's just the mind boggles. So hopefully you can see how powerful a concept this is without having to, put a large sum in all at once. Just divide it up into smaller amounts and just ride the market, ride the waves. So it's not advice, again, about where to put your money or how much. That's a whole other story. That's entirely down to you. This is just to show you the potential of what this type of strategy can do for you. And if you're looking for potential long-term gain with small amounts put at risk, then in my humble opinion, pound cost averaging cannot be beaten. It's as simple as that. So See what you think. Do a bit of research into what might be best for you if you're interested in this, whether it's cryptocurrencies, index funds, other stocks or investment vehicles. On the call that I mentioned at the beginning, we did this into our child's child trust fund. A lot of you, if you have children and you've done the same thing, same principle, except that we put it into, we chose which vehicles to put our child's trust fund into, and they've performed very, very well over the course of the last 17 years now. So yeah, it is a question of choosing wisely, doing your research, getting ahead of the game. Start small, dip your toe in the water with this. It's great fun. I just thought I'd mention it to you at the beginning of 2025 because it's something that you might want to have a play with this year, perhaps. Put £20 in or $20 in or $50 or $100, whatever your budget is, into something. Find something. Just play with this principle. Just use money that you can afford to lose and just have a play with this if you're interested in doing it. So yeah, just a little bit of a tip, bit of fun, bit of education for you there on that front. Hope you've enjoyed it. This, along with many other myriad tips that we give in our Freedom Club, is what happens right in there. If you're interested in joining the throng, joining the family, then please head over to our website, which is the-freedom-club.com. We'd look forward to seeing you, of course, in there and helping you any way that we possibly can. And tips galore like this are abound. Until the next time, have fun, and I'll see you then.